Welcome to TradeTheNBA.com. This is Jonas Reports for the 13th. It's not a Friday, it's just a Wednesday, but as you can see, we talked about the general softness with that cyan being over green and falling steel. Getting a little bit of an inversion right here at the beginning, so this test back of the ABMs, which is what we kind of expected, taking place. Of course, the shakeout was rising. Now, the problem you've got looking at this is you might be thinking, oh, wow, I've got lower shakeouts on higher highs, except for you have this move right here. So this is a higher histogram than the previous one. So it's still consistent. What I'd be looking for now is if we move to lower or negative while at the highs, then I think you would definitely be in a much more precarious position from a long standpoint. But as it is now, Power Mode 2 continues to rise in that, so nothing to be really all that shocked at. And here you can see it more clearly on the NASDAQ, where that cyan completely below the green, and green having crossed above, and still having a full reset of short-term as well as mid-term buyers within this. So any pivot up here of the red's going to be a P2 higher, and it certainly could take us to a whole new set of highs. And of course the euro filling back some of the excessive pop, but right in a previous range where mostly the euro had stayed for quite some time, that the US particularly prefers from an exchange value. I know the Eurozone itself probably would be more comfortable down in this range that we had talked about before, which is that 116 to 110 range, but they're not the ones controlling the situation at this particular point, so they don't get to decide. And of course, gold. More they talk about it, even here they're talking about another 100 days of potential lockdowns and stuff because of variants, despite the fact that you have the vaccine rolling out. So that's a problem for gold in that, because it really inhibits its ability to move. And I think you also saw it on cryptocurrencies too, that are giving back a little bit, just because the belief that stability is going to return. From an intraday standpoint, well, let's enlarge this a little bit, because it did everything that we were looking for from a previous day. I'd marked the positive extremes that we had from the previous run, and of course, once the day started, we filled right back into those setups beautifully, and then we started to build back and forth. And it was interesting because we had some of these where, again, you have that dip of the steel just below the zero level right there when you have the green crossing over solid buy at that particular point, and then boom. Another thing I've been putting into program, and I'll see if it tests out as I expected, but where we have our negative trig number here on the green, which is usually below zero, when they spike above zero, and then you get a steel up pivot, we tend to find that is the beginning of a new turnaround to the upside after getting a short signal. So we see it particularly later on, where you get these short signals and then all of a sudden they don't last very long off a DOC spread. Well, that looks like it's going to be our powerful signaling on knowing when to flip those back to an upside. So after we had the last configuration of shorts, we went down, fully filled in the blanks from before. Actually, I think I have it marked more on this chart right here. Was the this is the adjustment of the power mode cross, and where I had marked those lower levels. This bottom one, the 76 range, is what I was talking about from a much lower configuration, and that's exactly what we filled. So from the yellow candle, full rise, and then this is one of those instances I was talking about where we're in a nice DOC spread, but you've got steel coming from underneath. You get the green spike, and then the corresponding pivot up of steel, and that led to the little burst back up. Secondarily, it happened again right here, ending the decline, and then as soon as that steel starts moving, it goes right back up. Pretty regular. It almost gets, here's a case where it's just a fraction below the 1, and then turns around. Of course, even if you're a little bit late to it, it's again that green crossing right here was the signal up. And then we ended up with a pretty quick DOC spread post-market that took place literally right around 3,800 there, and looking like that's going to fill back to this positive extreme, which began right here at the 84 level, and we're getting pretty close to filling that one back in the post-market. So it's an opportunity to take out any shorts with a new high, and then fill back and clear out any stops for those long entries that are hit. It's almost as good as clockwork, but it's just a little more dynamic because they're picking levels that don't really correspond to points or areas where people think of logical support. People like to pick those even numbers and ranges, but that's why the computers that create these algos do different ranges, and we find some of these just peculiar numbers. To them, it's not peculiar, it's just based off of what they see as imbalances and taking advantage of them. And once they have, they revert back to the mean, and that's why the S&P is often known as a mean reversion market, because you'll get outside moves and you return back to the mean of it. So that's mostly how value is theoretically determined. So I know people like to look at the base fundamentals. Well, that's just a cursory portion, and then of course you have your multiplying factor, which can change based on things like this massive money printing, the devaluation and devaluation. Most people would think that prices and stuff wouldn't have the same impact, but it's inflationary. The market's just reflecting that inflationary nature. Eventually, everything catches up to it as prices skyrocket later on. The market's just ahead of it all, like it's supposed to be. As always, though, I will certainly update things and keep you informed of the latest. Trade well. We'll talk to you later.